Good morning, good afternoon, good night. Welcome back. Welcome to. Appreciate the support either way. My name is Joe Josh. I go by iChart Daily. Today is November 12th, 2025. In today's video, I'm going to be going over my thought process and why it's so important to understand what's happening in the chart's indicators compared to the actual ticker itself. And it doesn't matter. It doesn't matter the ticker if you're seeing certain things play out. So, because they play out, it doesn't matter if the ticker is XRP, gold, XRP versus Bitcoin, Bitcoin's dominance, a stock, which is MO, the T for AT&T, the total market cap. When certain things play out, they in the indicators, they usually play out in the price action. It's a weird magical game that we're playing. So let's go back to XRP because it's for some reason the chart is very clear because it's happened 2 times in the past. And this is why, once again, it is so important to just have basic knowledge of just opening up a chart, looking at 3 indicators and understanding what section it's in. Is it in a bullish structure, bearish structure? Is there any type of divergence where you could just figure out if the waves are getting lower on the indicators while the waves are getting higher on the price? So it's just simple knowledge that, once again, if you just stick around, subscribe, chill out, grab a coffee or a beer, roll one up, you know, it's just the same lingo over and over. Once again, I always start with longer time frames because they hold more value. There's less fake outs. When stuff happens, it was like officially bear market or bull market. And once again, if you're new to my channel, I am a swing trader, right? I was telling everyone, just for one example, not to pat myself on the shoulder, but I was telling everyone, when the altcoin is down 80-90%, I'm going to start dollar cost averaging, right? We're at levels that we were extremely oversold in the past. And then guess what? We went from 35 to 45 cents up to $3.70. So once again, my process, my strategy is I've been taking profit from projects that I've been buying for the past year. And once again, I've been buying XRP and accumulating before it was even on Coinbase. So, 2 bags, I have trading bags, and the trading bags always need to take profit so that I'm looking to buy XRP if it ever does another 60, 70, 80% correction, which has happened multiple times already. So once again, I believe in XRP, I believe in the news, but I'm not going to use the news to help me open longs or shorts or trade a coin. You understand? If and when it takes over SWIFT and ISO 20022 and the MasterCard news, I know all about it. I know all about it. The only thing that matters, though, is if a death crossed and if we break the RSI and the stochastic breaks below. So let's get into it, right? Let's get into it. And I'll go into a couple. Once again, I spoke about total. I talk about MO. I talked about AT&T. We'll go over it because it's the same lingo. You need to understand what's going on with the chart first, the indicators, and then we go into it. So it helps when obviously a chart has data. Like XRP has been around since 2013, excuse me. So we've seen on a monthly time frame this scenario play out a couple times to help you understand what potentially is on the horizon, right? Everyone right now is trying to figure out, is Bitcoin going to go back up to 126 and make another higher high, or are we going to go back up to the 120, 126 and make the same high, right? Because I've seen multiple pictures of this is it, this is it, this is the end, this is the end, this is the end. You know the picture I'm talking about where it says it's one chart up from 15,000 to 126 and it's one straight line and it says this is the end, this is the end, this is the end, this is the end. I could actually draw it for you right now because right here, right? Let's delete everything. Let's just wing this video, right? So it's like, oh look, right? They said this was the end here and not buy. Right, they were wrong for saying that. They said this was the end and not to buy. And they were wrong. They said this is the end and not to buy. And they were wrong. Why is this potentially not the same as this as this and as this argument, because what's the rule? What's the rule? I want you to say it in your head right now. Think of it like this is class. What is the rule? The rule has trend line in it. Come on, there's only like 6 of them. Trend lines go with trend indicator. So yeah, you can make an argument that this was definitely a good time to buy, good time to buy, good time to buy. Now the trend line is broken, and why is that? What indicator do I need to look at on this time frame to justify and confluence that the trend line needs to be deleted? The MACD. So to make the argument that this was the trend line all the way back from 2023 January is correct, because that's when the MACD golden crossed, right there in May. So because we were forming a bottom, we were doing this. We were going sideways for the longest time. Right, we were like bouncing, bouncing, bouncing. And guess what? Those trend lines had to be deleted once the trend indicator changed. Guess what? During the bear market, when I was telling everyone 17.5, 15.5, 13.5, trend lines were going down. And the trend lines have to be deleted eventually. What's the indicator that helps you understand that the trend is changing? So once again, indicator making a top, trend lines usually go sideways. Officially death cross, you're going to see more downward trend lines. MACD forms somewhat of a bottom, your trend lines are going to go sideways. MACD golden crosses, guess what? Your trend lines need to start going up again. Now, during these times and during these times, this is the top, this is the bottom. They stay sideways to allow the indicators to form hidden bullish or hidden bearish. That is what we were seeing for the past couple of weeks, like prices going up, but your RSI coming down, right? Prices going up, but your MACD waves are making lower highs, right? Once again, I trust charts over people's opinion. A very clear example of that is I've been telling you facts. Like, if there's a death cross, we went down. If we went from the 70 to the 50, we went down. If the stochastic was below the 50 in a bearish structure, we went down. Someone comes to the table and says, yeah, but Bitcoin's Lightning Network is going to come out in like 3 months. That's what I'm talking about. By not listening to people's opinions and trusting the charts instead. If someone says, well, dude, I mean, gold's flying because there's war and the dollar's going to collapse and this and that, which is true, right? Very, very true. The dollar looks like absolute trash. Countries are opting out of using it for oil, for trade and stuff like that, which is why I think the dollar 2.0 is right on the horizon, right? They'll crash the system. I don't want to say too much before this channel gets banned as well. But once again, the asset's up 4-point-something million%. All I'm looking to do, cuzzy, is not, we're not going to see 15,000 again. Can't make that argument, right? Because we've made a higher high. So we're going to 90-something% chance make a higher low to the 16. Could we come all the way back down to 35? 100%. 55 to 35,000. Cool and easy. And I'm looking to take profit around the top to dollar cost average around the bottom. And I just continue increasing my portfolio's positions over time. Because eventually, and I wish this for everybody, your portfolio gets too big. The money that you make from your 9 to 5, from your job, from the office, from your business, from your real estate, from your rental, from whatever, is not enough during the bear market. I'll give you an example. Hypothetically, I've helped a lot of people over the years make money that they would have never had, because it's a lot easier to make $100,000 than it is to save it, especially if you're on a 9 to 5 salary, right? And you live in New York. Forget it. If you live over here, I don't even want to say it. My point is, if your 100,000 portfolio goes down 50-60%, are you going to have 50-60,000 to put in to bring it back to where it was? Or is it easier to take 20, 30, 40,000 profit when you're up, put it into like a USDC, collect the 4% during the year to a year and a half that you're bearish, and now you have a lot more money and zero effort to dollar cost average back into the projects that you believe in long term, like your Bitcoin, Ethereum, Solana, Chainlink, Ondo, XRP, Flare, all the ones that you believe in because of the news, just trying to buy them at lower prices. That's all. So now how do we understand what happens? And why do I say we potentially could have a dead cat bounce out of Bitcoin and all these things, right? Because we're forming a falling wedge, but what usually happens thereafter? Well, once again, everyone was saying that this is a buy the dip, buy the dip, buy the dip, but now your MACD is coming down, which means once again, if we continue to come down and the month continues to go in, now we have 18 days, 9 hours in this monthly candle to close. If the next one opens up red as well, you have to eventually delete that upward line. And then you have to say, okay, we now need to look sideways. And if we look sideways, 82,000 and 93,000 is on the table, because now your trend lines need to go sideways. And then you need to say, well, 115 to the 125 is going to be resistance. And then remember what I said about if we are forming a top, what needs to happen with the price action waves? These waves. They need to go somewhat sideways, a little blippy blip up, little blippy blip down. And as the months go by, right, the bearish divergence or the hidden bearish divergence continues. So these next couple of weeks are crucial to help someone like me with the confirmations understanding, right? Because you can clearly see here we're coming down. I'll go back into XRP, but I just want to show you what I'm talking about, right? Like this is a falling wedge. The falling wedge should break to the upside. Where we're at this point on the weekly time frame RSI, just to recap if you're new here. This is it, bro. This is not my opinion. We break this level here, all you have to do is scroll down and look at the past and see what happened in Bitcoin or any, okay, this is what I mean by it doesn't matter the ticker. When the longer time frames or any time frame are entering certain sections, like when the RSI is below the 50 and stays below the 50. This was just like you dipped your toe in the pool and you came back out. You dipped the toe in the pool and you came back out. You dipped your toe in the pool and you came back. Now you're here again, and once again, I'm noticing these waves coming down, which is not the best structure. So even though you're dipping your toe in, it seems like someone's coming from behind you and they're going to be pushing you in the pool soon, right? And when can this fall down? I'm looking at the monthly and I'm looking at the 2-month, right? The 2-month, once again, the RSI has 4 sections, right? Which is above 70, above the 50 to the 70, above the 30 to the 50, and below the 50. This is when you're the most parabolic on any time frame. And then you have to understand once you break into that section, right, above the 70, if you break below, you are now entering a different time zone. You're entering a different section. Price action acts differently when you're breaking the 70. When you're breaking the 70, you're no longer using the 11-day moving average as support, right? So if I go to the daily, and you can see here we went above, right? Just an example. We went above, and then once we broke below, when we came back to the 50, we broke the 11, broke the 21, and broke lower, right? Because we broke the 50 line. So that's what I mean by using visuals to help you understand what's going out. Now, another visual, we're below the 50, and I made this indicator so that it changes the 11 and 21-day moving average depending if the RSI is below or above. If it's below, you can have a dead cat bounce, right? This wave coming up, but we could see rejection from the moving average like we did here, right? Now, if we were to break that, I'm going to be using, I say this in every video, longer time frames, to help me understand where there are major liquidity levels, and you could clearly see resistance here and you could see resistance here, right? So if we were to do this and then we break to the upside, I could see something like that happening, and then more blood on the horizon if the 2-month continues to come down and everything else. Now, the same thing is playing out with XRP. XRP looks like it's having another falling channel situation that could break to the upside, right? Like this one here. Now, this is why you need to look at a chart, because if someone shows you this, they're like, well, dude, we broke this and we're going to go to the upside. So obviously we're going to break this and go to the upside. Well, you have to look at the longer time frame, right? And I do think eventually we could break to the upside, but do we break this level here? Or do we come back up and form a lower high somewhere around here, which then shows me that this could be tick tock, don't you stop. That's all I'm saying. Tick tock, the volcano is coming. Okay? You're talking to someone who has seen volcanoes erupt multiple times. The floor is shaking. The animals are getting worried. The animals are leaving the area. If we come up and form a lower high to here again at the $3 to $2.90, but everyone's saying it's because of the MasterCard and Citadel and everything else, it's a head and shoulders pattern. And the reason why, once again, I'm leaning more bearish, we go into it. Not my opinion. Your MACD is death crossing. Your RSI was above the moving average was above the 70 line. We were parabolic. We came down. We used the moving average as support, formed a lower high, right? Does everyone see the lower high on the RSI? Delete this while we made a higher high on price action. That is not bearish divergence. What is that? Hidden, right? Because the prices are going up, but the RSI is coming down. Your stochastic RSI waves are coming down. Your volume is coming down on the MACD. This is not potentially the most bullish scenario possible, and this is what I mean by I trust charts over people. Someone texted me the other day. It was like, hey, should I be buying more XRP right now? The first question, once again, there's so many questions to ask back to figure out the right answer, right? If you have been buying XRP since 34 cents and you're just looking at the dollar cost average at the best time, that's one answer. If this is your first time buying XRP, that's a different answer. If you bought XRP here and you're looking to take profit because you don't care about XRP and you need the money for different projects, isn't that totally different answer, right? Never go fully in, fully out. That's all I say. This is a technical analysis breakdown. This has nothing to do with the news. Not financial advice, but if someone's like, I don't own any, I said, let's choose 3 levels, right? Like now, 150 and $1.25, and then we're getting in the game because I do believe in XRP and Solana and all these other ones for the next 10, 20, 30, 40, 50 years. But the disclaimer is, will they have corrections and bull markets during adoption? That answer is also yes, because, all right, because if you could answer this wholeheartedly, which coin has the most news surrounding it? Positively with governments. I don't care if it's called the banker's coin and this and that, but it's technically XRP, it's Chainlink, right? There's certain coins that have like real life companies looking into them, countries looking into them, banks looking into them, using their blockchain, etc., 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 right? You could see the writing on the wall. If that's the case, why isn't XRP number 1? Because a lot of it is based off of market cap and a lot of it is straight fluff right now. It is. It really is. A lot of it is just squiggly lines for the win, technical analysis, and like technical analysis patterns play out more often in crypto than they do in other markets, which shows me, and I hate to say this, that it's more manipulation than actual growth, if that makes sense. But let's go into it, right? So you don't need to know technical analysis to be able to look at these three indicators, identify has what is on the table, meaning death cross, breakdown, break below the 50. Has that happened in the past on the time frame you're looking at? Yes, it happened here and it happened here. And what did the price action do? What was the price action thereafter? How low did we fall? Where did we fall to on the indicators? What were the shorter time frames that showed you that it was a good time to buy and bleeding has stopped? These are all the questions that I ask myself. So once again, when I see a death cross and a break of market structure, right? RSI was above the moving average since October 1st, 2024, and now it broke below October 1st, 2025. MACD has been in the golden cross structure. If you really zoom in, right? Let's just say here, July 1st, technically October 1st, and then it was off to the races ever since. Another thing, the RSI. Have there been times in the past where the RSI was above, right? Was above, was below, and was below. And what was the price action when you put all these variables into your brain matrix? And you could see, right, now this is where we put on maybe like an 11 and 21 day moving average, right? So we fell back, we fell back, we fell back. We had a dead cat bounce. We had a dead cat bounce. Okay, not there yet. But each low, each high was lower. And the thing that I want to see now is like, when do we continuously go down and break the moving average, right? Like, when did this happen here? When did this happen here? And then I double click and I say, okay, it was like when we death crossed like a month or two in. Okay. We were below the moving average in section A, but below the moving average. Check. 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 We're below the moving average. Okay. Stochastic. What happened here? Where was it? It was at the 50 and it fell to the 20 and below. Okay. Was here. Was at 39.40 and fell to the 20 and fell below. So the only thing that really happened yet is the stochastic has like one more month to break into the section that I just showed you happened in the past. And we got like 18 days, 9 hours to see what happens there. Now, visually, you could see here we're at the 11-day moving average. And if we break, we could go to the 21, showing me that we could go to these liquidity levels here of $2. Now, if we were to break $2, excuse me, if we were to break $2, let's turn this off and let's turn on the SMA 50 and 100-day moving average. And you can see here, I know it starts getting a little squiggly up in here, but let's get squiggly because I'm looking for patterns. I'm looking for the bearish pattern to play out. We go to the white lines or the purple lines. We break the white and the purple lines, we go to the red. Okay. We go to the white and the purple, and then we go to the red. Okay. Well, Johnny, if we break this $1.81, where do you think we're going to? We're going to the red. Now the red's coming up. You could see here the red could potentially line up with like this $1.25. Let's do this right here, right? So like right here, I like to use 2-3 levels. So like here, and then if I turn this off to give you a visual, all right. So we have to break this level here. We set an alert around these levels, understanding that this short would be from here to about here. And then this would be a cool 30 to potentially 50% dip. From this high, it would be a cool 75%. I'm just curious what this one was. This one was 84% in 426 days. That was from the top, from this level here. It was about 273, right? 77%. The pumps are getting smaller because of adoption. You could make that an argument, right? More people with money are investing. This one was 96 to 94%, right? That's the whole length of it. Technically, this one was 83%. I mean, right there, 600 days to technically 1,200 days. I would say there because that was the first time that we started making higher highs. And this one, just based off of average 963, right? Taking off 300, taking off a year each time. So this one could be a healthy consolidation. And let's just speculate, right? I keep saying February, March. My birthday's March, and it's usually tax season that you see people taking profits off the top. So just curious. Once again, it's so difficult to chart an alt or actually trade an alt because you got to look at Bitcoin, see what it's doing. You got to look at Bitcoin your coin versus Bitcoin as well as your coin versus the dollar. Right. So we're here. Okay. Here's the chart that helped us understand that we should have been buying more XRP when it was extremely oversold versus Bitcoin. Then what happened was it was extremely overbought versus Bitcoin. And what happens is your profits from your XRP usually don't go back to the dollar, which is a depreciating asset that the government keeps printing more of that has an unlimited supply. We came back, right? We came back to this level here, which was support. I'm doing this live. I want you to hear my thought process, right? So it was resistance that was turned into support. So this level right here, let's delete everything. Actually, I don't have to delete everything. Let's just clean it up. All right, so solid line. Let's make this red. That's your resistance. Here's your support. Lines in the middle is like the line in the sand. Technically, there's 3. Change this to dotted and orange. So we need to see if we break this level. We know we definitely have a nice little drop on the horizon, good 20 to 30% down. You could set an alert once you identify a trend like that. Right, you want to set some alerts because you're not going to sit here looking at this monthly XRP versus Bitcoin chart. So set an alert. This level here, 0 is 1949. Set an alert here, 0 is 1510. Set an alert here, 0 is 1229. Because if we were, you could see to get out of this box, it is cool runnings here. That's officially bear market, cuzzy. So now, just to play devil's advocate, let's go to the weekly. Let's see. Once again, what am I looking at? I'm looking at waves, bro. I'm just a surfer from New York looking at waves, trying to see if the wave's going to go back up, and we have potential for XRP to go back up. Once again, this, we want to see a support here, so to show us that we could do this back here, showing me that we could do this to this, right? But once again, you got to watch out if we do this, because if we do this, we do this, and then this is neckline here. This is arm. Arm gets filled. And then I'm looking at this. Hey! So funny how the arm fills exactly where the long-term trend from 2020 lines up with. Isn't that weird, bro? Another thing, um, take a screenshot of that. Thanks. Another thing, if you remember me saying, when you have a breakout of a trend, it needs to stay above. The breakout is $1.97. If we break $1.97, everything I just told you about us coming back to 125 to 75 cents is 100% on the table, because the pattern that XRP is forming is an ascending triangle. An ascending triangle is when you make the same highs but higher lows. This pattern that just played out was a beautiful W pattern. Unfortunately, now that we are extremely overbought, if we break the orange dotted line of $1.97, we could come back into the triangle. And if we come back into the triangle, if you're having a breakout to the upside, what was support will be used as current support. If this was flipped to the other side and it was a break to the downside, right? If this was support and this was resistance, you'd be using what was resistance as current resistance. But unfortunately, this is this way. Excuse me. So once again, alert here. We need to see wicks here. If we officially break the 197, not financial advice, but I would look into be buying more XRP at the 159. I will be buying more XRP at 120 to potentially 125-ish. I'm going to keep some shekels on the side for 82 to 75 cents. And instead of chasing green candles and buying more XRP above $3, I am cool getting it down 46 to 66 to 77% down. Now, my sheeplings, this does not play out for a while, bro. A very, very, very long time, because this is a monthly time frame. So we need to see what happens over the next 18 days. We need to see what happens with this falling channel, where it breaks out and where it breaks to. As of right now, we're still in the trend, meaning like this falling wedge. So once again, how do we know when that breaks out? Well, was there an opportunity in the past that looked very similar? And you could see here, I could almost bet my last dollar that the RSI was above the 50 line there. And we were in a bullish market structure on your MACD. And the winner is bingo. So we were in, you could see here, let's zoom in so everyone can see, we were in a falling channel, lower highs, lower lows. Everyone forgets because they have short-term memory, but this was January this year. Guess who doesn't forget? Me. Well, number one, I have like elephant memory, but the chart doesn't forget that it went from $2.38 to a cool $1.75 and then broke out of the falling channel. And then guess what? The chart also helps you understand where indicators were and what they were doing when the breakout occurred. When did it happen? When your 2-day RSI was down, 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 broke above, used as support, and boom, we broke above. Now we go to the 3-day. 3-day was in a golden cross structure. 3-day broke above. 3-day broke above 50. We went from $2.14 to $2.60 and continued the uptrend and made higher lows. We went to a 4-day. We saw the golden cross. RSI was below the moving average, stopped, went above the moving average. We went from 212 to, and you can see same thing over and over. So as of right now, where's the RSI? Where's the MACD? You could clearly see we're getting a lower low but higher low out of your MACD. We're getting higher lows out of your RSI. Your RSI is still using the 50 as resistance, but came down and is using it as support right now. So we need to see, does it come back down like it did here? or is it going to break above the 50? So because we understand the levels, we could put an alert at the 54.06, we could put an alert at the 43.54, notifying us that poo-poo's hitting the bed, we're coming back down to 218 to 217, or we're breaking the 252 and heading to the 267 level, but we're not breaking the 267 level again until the 2-day and the 3-day golden cross, break above the 50, everything I just showed you. That's the video, 35 minutes, a lot. Once again, let's recap. I trust charts over people. Long-term trends predict short-term outcomes. I don't chase green candles. I buy at support in order to take profit at resistance. Rules. Follow them. Look at the chart before you buy anything. See if the current market structure has played out in the past. What time frame helped you understand the break up or continuation to the downside? What time frame helped you understand if we were in a bull market for a long time or a bear market for a long time? What's its market structure? Are we bullish, bearish, forming a top, forming a bottom? Are price waves going sideways while indicators are making different waves? These are all questions that you need to be asking yourself. And everything that I just showed you now is not rocket science. It just takes effort. Not only effort, it takes, I guess it takes effort. Just opening up a chart. And once again, indicators are MACD, RSI, stochastic RSI. If you have questions about anything, put it in the comment section. As of right now, the market is on thin ice, not my opinion. Things are playing out on indicators that don't have emotions, that have played out in the past, that has showed us that we could have dead cat bounces, but the steps, the waves, and the swing trades could potentially be making lower highs and lower lows for a long period of time. Enjoy the day. If you appreciate these videos and this time that I put into this, like, comment, subscribe. Enjoy.